I'm just making sure it's unmuted.
No, that has to be, yeah, unmuted.
Yes, we are.
We're just waiting for mics. Just a small. We're just waiting on mics, everyone. So bear with us. But before we get recorded, I'll. I know. Before we get started, thank you very much. Okay, welcome everybody to Blockchain Week. Thank you to our sponsors YBF, and sorry to the co-workers that we are currently disturbing in a major way. Thank you everyone for coming in person. It's so exciting to be able to have hybrid events. Thank you to all of you joining online. My name is Karen Cohen. I'm the Deputy Chair of Blockchain Australia, Block Mum, for those of you who don't know me. And I'd like to begin by acknowledging the traditional custodians on the land on which we meet today and pay my respects to their elders past and present, and extend that respect to Aboriginal and Torres Strait Islander people here today and online. Just want to welcome our panel. So we've got Jonathon Miller here. He's the Managing Director for Kraken Australia. Prior to this, Jonathon ran BitTrade, one of Australia's first cryptocurrency exchanges, founded in 2013 and acquired by Kraken, a global exchange, in 2020. And he has advised large enterprises and startups as a director of blockchain consultancy BitTrade Labs. Byron Goldberg is the country manager for Luno. Welcome, Byron, a global cryptocurrency platform. After working at a chartered accounting firm at EY in Johannesburg, he joined a much more exciting world of Luno and launched the Australian market in August 2020. So a new player, welcome. And Sam Dastiari, welcome to our panel, late addition, General Secretary to the Australian Labor Party from 2010 to 2013, elected to the State Senate for New South Wales in 2016, and a very, very big supporter of the cryptocurrency industry in the past.
I believe I insisted I referred to as colourful Labor identity.
Late addition, as I mentioned. All right, so we'll get started. So we're going to start with you, Byron. Just tell us a bit about your exchange and what it makes it different.
Okay, so Luno is more of a wallet than an exchange. We have three products. First is that wallet, the instant buy and sell, very easy to use, pretty much hand-holding for getting into crypto for first-time users, first-time customers. So we have the wallet, instant buy, we have an exchange as well, and we have our savings wallet, which gives customers access to earning a bit of interest on their Bitcoin, Ethereum, and USDC. For those who know, USDC, the stablecoin. Luno essentially is meant to be as simple as possible. So it was founded in 2013 in South Africa. And as you can imagine, in the African market, it really needs to be simple, where people often haven't gone to high school or university. So in order to make it as simple as possible, they created this wallet. That's where we are today. We've also got a learning portal for our customers to really learn about the basics. So it doesn't go into detail, into extreme detail, but really, what is Bitcoin? How does a send work? How does a receive work? And yeah, that's pretty much it.
Thank you. Jonathon, tell us a bit about where you're at with Kraken.
Sure. I mean, I don't want to make it sound like an advertorial, but how about I tell you a little bit about Kraken's founding, because it's an interesting story. So the founder of Kraken is a guy called Jesse Powell. He went over to Japan when Mt. Gox went under, and a lot of you guys I know were around when that happened and tried to pull money out of that beast. And he helped them out a little bit, tried to. And when he walked away from that experience, he said he needed to build an exchange that fundamentally professionalized the experience of cryptocurrency. exchanges in the market, because up until that point, I think it was, pretty wild. So in that intervening period, a whole lot of stuff has happened with Kraken. It's a super interesting business. They've got, I would say, a portfolio of platforms. The one that you might know is a spot exchange, it's a cryptocurrency exchange, a digital assets marketplace, and that's global. They also have a futures, a regulated futures market out of the UK. I believe it's the only crypto futures regulated product. They have a regulated benchmark product called CS Benchmarks. They have a exchange aggregator. So yeah, we've got a kind of a broad spread of different touch points and tools for people depending on the use case. So it's a really interesting business, and it's really exciting bringing some of those products to Australia, and happy to give some insight today into what's happening globally and what our view really on the market.
Thank you. Might pass over to Sam. Sam, what was it like in the beginning when crypto exchanges were setting up in Australia, and what was your involvement?
Yeah, look, first, congratulations on this, Steve. This is an incredible conference. Look, there's always this challenge, right? How do you get the best of international investment into the Australian crypto industry, and at the same time, not let Australia become an outpost of just big American and European exchanges? That's that balance that you want to get right. And when we started, like a long time ago, I got involved in it really, really early. I mean, I've known Jonathon so long, I remember when he used to run an Australian exchange. But look, about 2014, right, there was a huge issue. There was a huge taxation issue. The industry here was on its knees. The guy, one of Steve's predecessors, a guy called Ron Tucker, came to me and said, hey, we should do a big Senate inquiry into cryptocurrency. But back then it was just Bitcoin, but into Bitcoin. And I said, I think it's a bad idea. And he said, you'll get heaps of media. And I said, yes. And I just remember this. I remember we were trying to get it past the Senate, right? And it was one of those kind of non-controversial kind of inquiries we were trying to do. And I remember I had the terms of reference of Bitcoin. And one very senior government minister right now, right? At the time, they were junior minister, but now a very senior minister pulls me aside, and everyone calls me Dasher. And goes, Dasher, what the fuck is this inquiry about? I go, what do you mean? He goes, what do you mean about the bits of coins? Don't they just like make it in the mold, right? And so don't they just melt whatever gets cut off? And it took me about 5 minutes to realize he literally thought we were going to do an inquiry into the extra bits of metal that get made when you actually make coins by the Australian Mint, and what a waste of money that was. Like, this was the lack of knowledge of what was going on there. And since then, you've seen this giant evolution. You've seen the regulatory environment change, and it has changed. And I guess the point with this whole international domestic kind of conversation, which I like to say and remind people, is there's always been a tendency in the cryptocurrency community to view government and regulation in part as the enemy. And I remind everyone of this. There's a great Washington saying, which is, if you don't have a seat at the table, you're the one on the menu.
Well, anyone who have children under 18 watching, sorry. Thank you, Sam. All right, so only 15% of Bitcoin buyers are female. We're in 2021. 60% of buyers are aged between the age of 25 and 45. So what's the responsibility of the exchanges to attract more people to the world of crypto? And what's our approach to education? I'll start with you, Jonathon, since you're holding it.
Sure. It's a blessing and a curse. So I think it's a phenomenon that's not restricted to crypto, this phenomenon. I think in financial services in general, these stats aren't identical, but there's definitely a theme. I think that at the moment you would place cryptocurrencies and other digital assets like them at the riskier end of the investment spectrum. And we need to do a really good job of educating people about those risks and educating people about the underlying technology. So that's not just true of here in Australia, that's what Kraken tries to do globally. I think the industry has done a much better job of that in recent years as well. And most platforms now have a really good suite of educational tools around them. That's a starting point though. I'll hand over.
Jonathon.
Yeah. I've got a bit of a different take from my personal perspective. Obviously, exchanges have to try their best to educate customers. And like I said, we've got this learning portal where we try to do that. I think the current environment, and I'll get to females in a bit, but when there was the tech bubble in 2001, people weren't buying the tech companies because of the underlying tech. They were buying it to make money. They were speculating. And I think in the current environment, we'll find the released stats, I think in 2020, to say that 45% of people buying crypto or Bitcoin were buying because the price was going up. And that's it. People aren't buying, my mom and sister aren't buying Bitcoin to send me money for my birthday from South Africa. They buy Bitcoin to invest. There needs to be a lot of education coming from all walks of life, not just us as the crypto exchanges or wallets. It needs to come from universities and schools and media, and that will take years. It will take 10, 20 years for the general environment to just educate. Now you open up your phone and you use Safari or Chrome and you're on the internet and you're on Facebook and you're doing what you do. But 20 years ago or 30 years ago, you would have had to learn how to do that. It will be a gradual process. I think that eventually we'll get there. I don't think individual companies can teach everything there is to know. On the female topic, it's something that I also, let's say, for example, you said 15%. In Malaysia, we were at 12% last year, and we're at 20% this year, female investors. I think partially the fact that we regulated in Malaysia, it obviously became less risky because there was the SC in Malaysia that gave us a license. But females are known to be more risk averse when it comes to investing in assets, quantifiably risk averse. Crypto, as Jonathon said, being on the higher end of the risk to reward ratio, will naturally be invested in less by females. At the same time, the older generation who are 50, 60, 70, they need cash flow certainty. It might not be the asset for them to invest in. So, yeah.
Thank you, Byron. I might move on to Sam. You mentioned that we might be missing out on some international opportunities. What's your thought on, we had that Coinbase is listed in the US. Where are we in Australia versus the world?
Yeah, look, we're terrible. We're in a terrible position. I mean, look, I work for a private equity fund now. We've got about 8 billion of our own money under management. We manage about 16 or so billion of others as well. There isn't a culture here of that kind of risk-taking and that kind of investment. And on top of that, you've got a banking system that's fundamentally tried to undermine, this entire industry from the start. Again, I find it hilarious. I bumped into Brian Hartzer yesterday, and you're talking about Coinbase, right? He made a monster out of Coinbase, right? But I remember, and John and I were just talking about this. I remember when they wouldn't bank any of you, right? And yet they're bragging about their investment that they made in Coinbase for an industry that they themselves would refuse to bank. And I think the problem you've got here is, again, I know Chris and others who are real libertarian kind of element here, right? Who don't believe in the role of government necessarily within industry as a kind of restraint. The problem is that the act of not having regulation is a regulation because it's allowing them to try and stop the industry from growing. That you need regulation to allow the industry to grow. And that's the big problem. That's the big danger. Again, go back to 2013, 2014 with the GST question. Every one of the exchanges essentially had to go to Singapore if that wasn't resolved. And the problem we've got now is if you don't able to fix that, look, at some point, these guys will know far more than I will about this. There'll be some kind of a greater consolidation when it comes to exchanges, like any kind of industry in the world, right? But the danger becomes none of them are Australian. That in the end, it's only international. Nothing wrong with having big international players here. I think it shakes up the market here. I think it's all positive. But you do risk that essentially we just become the regional outpost like we are in so many different industries. And you don't end up having your Canvas, you don't end up having your, the AirTags, all these kind of big kind of companies at the moment listing and have done quite well, but we don't have them here. And that's a regulatory problem.
Thanks.
What was the question?
What are we missing out on internationally here in Australia?
I mean, I think it's an interesting point that Sam made about investment appetite. And, you know, we were a small startup here, and I think, you know, kind of at a macro level when it comes to risky venture investing in Australia, we don't have the culture for it. It's not just appetite, it's culture. And I think part of that is because we do have some significantly overperforming alternatives. You look at property right now, that's a long story. And so, you know, when you have, I mean, we should ask Sam's fund if they invest directly in Bitcoin. No? Do you invest directly in any crypto businesses? So, you know, I mean, we've got funds under management, and at the moment, the matrix and the kind of analytics you do on that are pretty simple in this market when you have, well, frankly, the best regulatory and set of stacked incentives to invest in property in any market in the world. We're over incentivized to make that decision, and it plays out. So I think we've got kind of cultural issues with risk, but they're born out of the environment for investing more generally. In terms of what we're missing out on here then as a result is more bright starts here. I mean, there was an Australian guy that I know that went over, he went straight to Silicon Valley in the same year that we started, and founded a company in Silicon Valley and got funded, you know, 100 times more than we would have got funded here. So, you know, I think there's a gap. It's a funding gap, it's a risk gap. Go talk to your boy, Sam.
Yeah, but before we pass on to Byron, I just want to say that, you know, this is a true story. We've got a startup here in Australia who was told to literally take blockchain technology off their deck, wipe their LinkedIn from ever having had blockchain technology if they want VC investment. So it's still real that, you know, that fear of investing in Australia in startups with blockchain technology.
And look, there has been some fantastic, just one more point, there has been a lot of great investment in the industry here, but the quantum is different. And that's hard, that's a hard challenge to overcome, because fundamentally you can service a US market from here, but, you know, there's another cultural gap, which is that VC and big capital in Silicon Valley wants you to be in that place first, wants you to service that market first.
Sure. The question, what's Australia missing?
Yeah.
Look, I know we've chatted a lot about the regulation. We spoke about it this morning and yesterday, and I think there's obviously there's a right way to do it, a wrong way to do it. There's over-regulation, under-regulation. I wouldn't say, earlier today I heard a stat that the growth rate of the jobs in Singapore since 2017 in the blockchain space has gone up 50% or something like that. You can't say that is caused by the fact that there is regulation in Singapore. I think there's many different factors. One of them being the fact that it's very low tax rates in Singapore. Lots of companies are moving there, and lots of companies have moved there. Second is there's been a bull run. People have been hiring. Every blockchain or crypto exchange has hired a lot of people, double or triple their staff. So I wouldn't say, oh, because Singapore has regulation, Australia needs it to bring back the investment. That's definitely not true. I think what startups need here is to know that they're not going to create a token and in 10 years' time or 5 years' time, oh shit, that was a security. And the exchanges that listed that security were now security exchanges. So you needed to have been regulated by ASIC. Regulation does help because it obviously gives people a path and they know where they stand. But like I mentioned yesterday, as long as the regulation is done where it's created for the industry, we're not trying to fit a square peg in a round hole. And yeah, I think not over-regulating and having a regulatory policy will definitely assist, but it's not going to bring back everything. It might be too late.
I hope it's not too late. Okay, so last big question for me. So Bitcoin was originally designed to bank the unbankable. Is it still its use case, or is it more about personal gains? I'll start with you, Sam.
I'm not the person to answer that, but I will answer one part of that. I remember in 2015, I was invited to be the international speaker at the North American Bitcoin conference, right? It was on Miami Beach. It was incredible. It was like a 5-day event on Miami Beach. And what I just noticed, there was 3 types of people in the crowd. Right? There were these like blockchain engineers who essentially like people like me, but they're a bit nerdy. They were into the technology, the currency, they kind of believed in the idea and blockchain. Then there was a bunch of libertarians, which you only get in America, who were anti-government, burn the flag. To these days, they're like dressing up in crazy outfits and are in QAnon. There was a whole kind of libertarian streak in the middle. And then at third, there was these venture capitalists that were circling, right? Just kind of essentially throwing out deal sheets. At the time, I think the price of Bitcoin was like $200, so that was nothing compared to what it is now. And I remember thinking, okay, this would be really interesting to see who's going to win this, right? Is it going to be the libertarians? Is it going to be the technologists? Or is it going to be the venture capitalists? And at that conference, by the way, the conference was raided by the US because there was a bunch of people who hadn't paid tax in 15 years and they located was speaking at the conference. 2 of the speakers got arrested and weren't able to speak. It was the best conference ever. It was like a Labor Party conference like times 10. And so, but it was interesting to see who was going to win. And I kind of walked away and I remember saying to a couple of my friends here today, oh, mate, the venture capitalists, they're the ones who always win. And they're the ones who won, right? It always is, right? It's become a product for money and value and investment. You know, is it speculative, is it not? It can be, all I can say is, Karen, that these people are better placed to answer that night. It can be more than one thing, but I think the people who understand it understand that, yeah, if you're just treating it as a speculative kind of game, you might make some money and you might lose a lot of money, right? You know, it might be for you tulips, or it might be something great that you can make a lot of money on the way up. The ones who understand it understand that when it can be more, that's when it's got real value.
I think the reason that there is an unbanked portion of the populace globally is because banking services are expensive as they currently stand, and there's no reward for them to banks micro payments and micro holdings. And I think blockchain and cryptocurrencies absolutely solve for that, and they do, and they are being solved for that. We worked on a project in Africa actually, and you know, it was essentially a kind of blockchain-based pseudo-banking ledger system for micro investment, community investment models where you had people in a group pooling funds and investing in each other's projects. Now, the simple fact is that in the Western world, banking regulations are really strict. Kraken has just got a banking license in the US. Does that mean that we have kind of gone to the other side and is that antithetical to the project of banking people using blockchain? No, I don't think so. So I think there's just huge amount of, we know that we're in the early stages of adoption when it comes to actual implementation for blockchain technology, and there's still a lot of problems with the rollout of some of those technologies, but they're absolutely cheaper than banking as it currently stands. So yeah, I would say that those two, yeah, it's a false dichotomy. You can look at certain cryptocurrencies as source of value, like Bitcoin is at the moment, and you can look at other cryptocurrencies as means of exchange, and you never know, Bitcoin might even continue to be a means of exchange for people as well. So yeah.
Thank you.
Again, I'll bring this one back to regulation. I think that it does solve for banking the unbanked. Coming from Africa, if somebody only has access to internet on their phone, but they don't have access to an ATM, if it's a cash economy, they can receive and make payments. However, there's been discussions with the travel rule, people generally know about it. If somebody in West Africa or Kenya has a little crappy piece of paper, but that's their ID, and on Fido can't verify that their document is real, they're never going to be able to open up a Bitcoin wallet on any platform. So there needs to be, again, this balance. The technology does solve for banking the unbanked, but there's a possibility that regulation actually hinders that in certain jurisdictions.
Thanks for that answer. We're coming to the end of this panel. I do want to say that I went to Vegas when we could travel, and I did see Andreas Antonopoulos, and I got to ask him that question live. So that was like my highlight of my crypto career. Thank you everyone for joining us. Thank you YBF for hosting us. We're going to move to the national exchanges panel now. And so all of you online, please stay online. Sorry that we can't answer your online questions or in-room questions, but we're moving pretty quickly at the Steve Vallis pace. Okay, thanks everyone.
Hello and welcome. I'll get this started because otherwise Steve will be giving me a move on. My name is Jack Derwin. I'm a senior reporter with Business Insider Australia and your moderator today. Thanks for joining us here in person as well as online. I'm joined here by our three panelists. So in no particular order, we have Adrian, who's been CEO and founder of Independent Reserve since 2013. I think you're well known enough, rather, that I'm not going to try and murder your surname. We also have Caroline Bauer, the CEO of BTC Markets. You've been in that role for 18 months now, and you've been with Blockchain APAC for several years before that. We also, on the end, have James Elia, the Australian GM of CoinJar, who's been involved there since 2014 with a few detours, James, but yeah. Beautiful. Well, I mean, I think that might be a good place to start. I'm kind of interested in how the three of you got involved heading up, three of Australia's digital currency exchanges. So if you kind of very briefly tell us how you managed to, find yourself in the positions you're in.
Yeah, absolutely. So I was first introduced to Bitcoin, I think in about 2012 by my friend Adam. And, I have a very technical background, so I was really interested in how it works under the hood. So I examined it, I built a little wallet, I really made sure that it works the way that the white paper actually explains that it does. And then after a while of doing that, I thought, I really want to get some Bitcoin because I think this thing can be really big. And I was really surprised to find that the only way to do it was a really dodgy looking exchange in Japan called Mt. Gox. And I created an account. It took like a week or two to get verified. I made a deposit to a bank account over in Japan. That took another week. The price of Bitcoin probably went up like 100% during that week, so I was a little bit upset. But then ultimately in the end, I was able to get some Bitcoin. And I thought, this was a really clunky process. And if this asset class is to become anything in the future, then, there's a real use case for exchanges that work the way people expect an exchange to work. They don't get hacked. They don't go down under loads. They're easy to use. Hopefully they're regulated. So that was kind of the genesis behind Independent Reserve. So we incorporated the company June 2013, and we raised a little bit of money. Back in 2013, it was very, very difficult to raise money for a Bitcoin exchange. I guess you guys probably can't imagine how difficult that was. So our early investors were very much early visionaries that believed in our story and believed in us as the people behind the idea. But we were asked questions like, are you guys building a drug market? Are you guys going to be dealing drugs with this thing? Like, no, we're building an exchange for an asset class. Eventually, we were able to convince enough people to actually begin the project. In parallel, we approached ASIC for an AFSL. We felt like it was obvious that an AFSL was required here because we're going to be holding people's money. We definitely have to be regulated, right? To our surprise, ASIC had no idea what we were asking them about. In fact, during the process, Mt. Gox got hacked, and the representative from ASIC looking after our application, he rang me and he said, now that Bitcoin's gone bankrupt, you probably don't need this license anymore that you're applying for. So that was kind of the level of understanding that we were working with from ASIC at the time. In the end, we got a letter from ASIC, a relief letter that says, Bitcoin's not a financial product. You don't need a license. Try not to hurt yourselves. We don't expect you to be around for much longer. I think that was the gist of it. I don't remember the exact words. But obviously they were wrong because we're still around. We ended up launching 2014. Market was dead. No one cared about Bitcoin. We kind of felt like maybe we made a mistake, did the wrong thing. Can we pivot to trading something else, trading wheat or something? Basically, it was very hard to acquire customers and the market was very, very flat. And then 2017 happened and we just found ourselves on an exponential growth curve. Everyone wanted crypto all of a sudden. We grew like 100% a week, for a few months. It was hectic. We didn't sleep for a while. And I guess now we've got about 50 people, 200,000 odd customers. The market's never been stronger. We've never been, I guess, more enthusiastic about this whole space. We've never had more confidence. We've seen, I guess, our customers increasing their size. It's just really validated, I guess, the early beliefs and everything we've done, and just really, really excited to be here now. Beautiful.
Thank you. So hello, and hello to everybody online. My name is Caroline Bowler. I'm the CEO of BTC Markets. My previous background is all traditional finance. I started off my career working for a private client stockbroker. My first project was in dematerialization of stock certificates. So that possibly ages me out of this room for a lot of people. So that was my first project. I moved then to a US investment bank and worked with them for the guts of 10 years, both in Europe and then in Asia and in Singapore in particular. And it was actually in Singapore that I got my first exposure to both fintech and to blockchain itself, and could really see the opportunity that was coming through and the problems that it was going to solve, not just from within the banking industry, but also what it was going to solve for us, the regular Joe Soap, the retailer, and the speed, the effectiveness. It was just going to be so transformational. So I made the leap out of what was considered such a stable job into the world of fintech and blockchain back in 2014. So we've been around for a while in this space. With BTC Markets in particular, I came on board with them January of last year. They had been a previous client of mine in my former life as an entrepreneur. And I really knew and understood the culture and the ethos that they had. It kind of mirrored my own in the sense of it was about safety for investors first. It was about being compliant first, more than anything. And similar story, I suppose, to yourself, Adrian, in that the founders of the company were coming out from a technology point of view. They are technologists, and they were really excited about this opportunity for what blockchain was going to do, rather than coming at it from a business point of view, if you like, of going, how much money can I make out of this? The money came, but it came later. The original thesis, the original idea, similar to independent reserve, I'm sure similar to yourselves as well, was about creating a safe venue for Australians to get exposure to this really exciting asset class. And that's been the growth story ever since. So those two kind of strands of being both a technology company primarily and a very compliant culture internally have kind of created where BTC Markets are now. So it was similar age. We were founded in 2013, went through all the bumps in the road, as Adrian has described, but probably similar as well to other exchanges here locally. We went through the lockdown and simultaneously went through a very rapid expansion of our client base, and also for the business. We've just doubled our team size over the course of the last 6 months or so. So it's been a really exciting journey. I think what we've pulled upon and what we've always fallen back on has been that culture of compliance and that technology first approach to really formulate something that's going to be robust and long-lasting for Australians to engage in the crypto economy. I would also kind of echo as well, I have never been as bullish about digital assets in Australia as I have been on the back of this week and what's been organised through Blockchain Australia, by seeing and talking to and engaging with so many extremely talented people within our profession. I can't but come away and just feel so positive about where our future is going to go. So on that note, I'll pass it across.
Well said. And yeah, just hello everyone. James Elia here, Australian GM at CoinJar. I just actually realized sitting here today on the panel that I actually first got into cryptocurrency when I met our CEO Asher at YBF in 2013. So it was a startup weekend. At the time, I was working at Deloitte in the external audit team. Wasn't having too pleasant of a time, as you can imagine, and spent the whole weekend there, and that's where I met Asher. And when I was ready to leave the audit, the good audit world behind, reached out to Asher and just had a coffee and was going to sort of offer, I'm not sure if he knows this, but offer to work there for free. But he just made me an offer on the spot in 2013. So I've been with CoinJar for close to 7 years now, and the company's been around for 8. So much of what Caroline and Adrian said can definitely obviously relate, going through that early period where, you know, you're probably spending more than you're making, and probably like Adrian said as well, raising some early venture capital investment. Fortunately, in a position since 2015 where we haven't had to do that, but obviously a lot of grinding and sort of, you know, I guess reinvesting back in the company. And it wasn't so much, like Caroline said, about making the money, and, you know, quite privileged to work with a great, you know, co-founding team, and, you know, everything we make goes straight back in. We've also doubled the team size and that sort of thing. So, you know, a lot of the stories you may have heard in sort of a few years ago about, you know, opening an account with an international exchange that you might not know about and you might lose your money. And I think we've also had quite a compliance first approach, and building the trust with the customer is the main thing. And obviously wouldn't be here without them. So that's just a quick one for me.
Yeah, it's fascinating how different and also similar some of those stories are. I mean, the follow-up question is Australia a good place to run an exchange? We had Senator Bragg this morning talking about how, you know, this regulatory haziness, you know, might risk, you know, some talent like yourselves sort of leaving Australia, going elsewhere. What are your thoughts on that? What are your thoughts on that, and how do you think we compare internationally?
Yeah, it's a good question. I think, I mean, I think we're all in a similar boat, but from CoinJar, you know, we've had a global mindset from day one, and it's sort of been something that our VCs have sort of pushed us for. So at the moment, we're operating in Australia and the UK. Obviously, we want to branch out and sort of continue to grow internationally as well. I would say Australia is a great place to run an exchange. I think, for the most part, the regulatory framework is documented and mostly understood. You know, obviously travel coming into play may shake up some stuff, but I think for the most part, even before regulation kicked in with AusTrack, we had, I guess, other businesses in the space we could look to and understand, you know, I guess where we sort of fit in the industry, and just sort of having that compliant first approach that we mentioned earlier. And just sort of, you know, I guess not being too outlandish and just trying to stick within, I guess, the framework, even before the regulation comes in. So how we stack up internationally, I think at a product level, we're probably all doing things that are quite similar to other exchanges. Obviously, different jurisdictions will enable, you know, different business models, and you might be able to, you know, get licensing a bit earlier in certain other jurisdictions. But for the most part, we've loved operating in Australia and now the UK. And yeah, I guess we've taken it a bit slow, and we haven't really cast the net out too far just yet. But yeah, just taking it slow and steady in each new country.
For us, we're an Australian first exchange. I think that's probably well known that this is where our horizons are for the moment. Where the challenges lie, and something that I know Adrian and myself often discuss within the industry, is around that lack of regulation and that haziness, as the Senator described. So it was extremely heartening to hear his comments about that regulatory surety that is on the way, and that for us will probably be the single biggest accelerant for our business in Australia. And I'm sure it's the same for everybody else on this panel. I'm very bullish, as I said, about Australia in general as a base. I'm very bullish because of the talent that's here. I'm very bullish because there is a culture in Australia of individual investment that I haven't found in places in Europe, in places in Asia. The investment culture at an individual level here, I think, is quite unique to Australia. The culture around SMSFs, this culture around understanding the financial products that you're getting involved with, the willingness of people to try out these new products. I haven't really seen or experienced it in Europe or in Asia. So, you know, that likewise makes me quite confident about Australia as a destination for digital assets. I also think once we get this regulatory piece in, it's going to be the best launch pad for us and for other businesses into the rest of this region and globally. I think it's going to really put us on the front foot. So I'm chomping at the bit to see what the Senate comes up with. How about you?
I would definitely echo the sentiment that Australia is a great place. I think the education system in Australia is very good. I think it produces a great pool of talent, which is really important when you're working in, I guess, a space like this where, you know, you're always on the bleeding edge of tech and you need a lot of smart people to work with and to build the product that you want to build. I know the theme of today, I guess, has been to maybe criticize the regulators a little bit, but I can give you our perspective. So about 18 months ago, we opened an office over in Singapore, and it was due to MAS, the regulator over there, to announcing a regime to regulate cryptocurrency exchanges. And this spawned a rush of exchanges to open up over in Singapore. I think about 100 exchanges applied for the license. We were one of the early ones to do that. I can tell you that no one's yet been granted a license. I can also tell you that the rules that MAS introduced were probably a little bit too arduous. They went maybe a little bit too early on the travel rule. So they're one of the first jurisdictions to actually enforce the travel rule. Perhaps they did it before the industry was quite ready. So I guess their point of view was that the industry should have gotten ready quicker. But ultimately, as you know, just one exchange in a sea of other exchanges, you can't force everyone else to do what you want to do. And the travel rule in particular requires everyone to kind of be on the same messaging standard. And right now there's a few different competing standards and there's not really any one clean solution. And the end result was that no one's got a license in 18 months. I guess cryptocurrency trading in Singapore has dipped a lot. And I don't know, like people have quoted numbers that employments, I think increased by, I can't remember what the last person said, but the thing is in Australia, we've also employed a lot more people, and it's quite likely that in Singapore, they would have employed even more had the regulations been done right. So I think it's important that regulation exists. I'm not saying that we should not have regulation, but it's even more important that the regulation be done right. And if it's rushed in, and if it's done without consultation with the industry, then there's a good chance we'll get it wrong. So a really good example of how to do it right was when we consulted with Austrac for about 2 years about bringing cryptocurrency exchanges under the Anti-Money Laundering Act. And it was a very consultative process. Like I was at the Austrac offices 10, 20 times. There was a process of education where we educated Austrac about what a cryptocurrency exchange is, which bits they can regulate, which bits they kind of can't, even if they want to. And Austrac listened to us and the rules they introduced were very good. They were pretty much what we recommended. And that became the model for other AML regulators around the world. So it's really important when regulation is introduced that it's done in a measured way. Otherwise, it can really stifle the industry. And I think that's kind of what we saw in Singapore, which is different to what a lot of people have said, but we're actually there. So we're on the ground and we're seeing it.
Colourful Labor personality. Sam Daciari before said, you know, Australia without, I guess, changes, you know, risks becoming this sort of regional outpost. I think, you know, the three businesses that you're heading up here probably stand in defiance of that point. And as long as there are changes, Carolyn, you said, you know, it feels like, you know, maybe the tide is turning on this. I guess, what do you think, what advantages do you think Australia has in this space, and what do you think, you know, we can kind of offer up? And also, sorry, to that point, if I could add on a third question, why is it important that we have local exchanges and a local industry here?
Well, I think that's about protecting the economy for the future. I think that for our point of view, digital assets, digital finance, that's the direction that the world is heading in. And if we don't have our own, you know, homegrown talent that's working in this space, we're just going to lie down and be steamrolled over. I don't think anybody in Australia wants that outcome, and we certainly, I'm sure sitting up here, certainly don't want that outcome. I think that there is enough talent and capability in this country, as exactly as Adrian pointed out. the education system here is doing, you know, fantastic work with this space. So absolutely, we need to, I mean, there's obviously room for the international counterparts to come in. They absolutely do shake up the game. It's fantastic. They bring in their expertise from overseas, and you know, the rising tide lifts all boats. But there's no reason why Australia should not be a local player, a regional player, and an international player in this space. Historically as well, financial services are the single biggest contributor to our GDP, as I was saying earlier this morning. We've got a whole pool of expertise there that can now be applicable into this area. Why wouldn't we want to dominate in it? It wouldn't make sense for us otherwise, quite frankly.
Well said. James, do you want to weigh in on it? I'll just add as well, quickly, I think just as a population, we're probably becoming, you know, obviously a bit smarter and a bit more savvy. I think, you know, in terms of just allocation, like if you think about asset allocation and, you know, perhaps, I guess even across the board, just looking for alternative investments at the moment. Obviously, you know, our property market, which someone said previously, is quite strong. But even, you know, just trying to get into the market, some millennials or younger people in our team obviously invested into crypto. And I think just if you're coming at it from a portfolio perspective, I think there's a lot to be learned. And even as, you know, I think the three of our exchanges would be obviously trying to attract and retain talent in the industry. So I think, you know, we can be examples in the businesses that we run. At the same time, the education has to obviously be there, so that it's like any marketplace, right? There's the supply and demand. So I think, yeah, it's sort of everyone's responsibility. We can do our part as well, but yeah, ultimately there's got to be that sort of awareness, and if people can understand something that's otherwise risky, and or even through the products that we offer, being I think predominantly retail focused, I think that's how people can start to get that level of awareness.
Do you have something to add? I mean, that was pretty well.
I think that's pretty well summed up. Yeah.
I mean, today we saw B2C markets come out and offer staking. You know, this sort of opportunity to earn on your holdings. I mean, looking forward, what kind of do you see? Where do you see exchanges going in terms of maybe offering sort of new ways to use crypto? Do you think that this is kind of I guess the next phase where we sort of earn, spend, potentially even borrow against crypto holdings?
100%. And I think that, I know, not to speak, I don't know what your plans are, but I'm pretty sure we've all got some really exciting projects in our respective pipelines to do exactly that, to open this up, that we've kind of started already with the exchange model, the simple buy sell that we all have, and now it's about building the next layer on top of that. And I think too, it's the reason why it's taken so long, which in the world of crypto, this has been quite some time, is because we've had to make sure it's been done correctly. And we have to make sure equally that it's done within the regulatory environment. But I think the ecosystem, it had to develop and mature more than what we're seeing, say, with DeFi. I think, you know, DeFi even a year ago was still kind of cutting its teeth, and it's now coming into its moment, would be my opinion on it. And I think building out the products and services and offerings within DeFi is going to be the next step for the whole industry. I'm sure similar for other exchanges. But yes, but for us then, you know, going into staking and starting to move into that space is very much part of the plan. And I think for the rest of this year, I'm sure all the other exchanges are the same.
What about independent reserve?
So I suppose the issue with offering these products in Australia is that the regulation around here is quite stringent. So I guess the word MIS is something I've been hearing a lot. And you know, I guess lending in Australia is very, very highly regulated. So as we begin to offer these slightly more exotic products, we need to make sure that, you know, we do it within the rules. And, you know, there are some cases where maybe the rules need to evolve a little bit to allow us to offer products that maybe competitors overseas are offering right now. And that is a little bit frustrating. I think there's a few of our lawyers in the audience who know all about this. But yes, look, this whole area will obviously evolve, and I think eventually we'll see, I guess, every part of the traditional financial system in one way or another mimicked in cryptocurrency, whether it's being offered by a centralized player like an exchange, or in a DeFi space, but we're going to mimic all the services.
As the market kind of matures and changes, do you see Australian exchanges coming into something of a consolidation period in the years ahead?
So I've been asked this a lot, and I've been asked, is there going to be a race to the bottom with fees, and is it a winner take all scenario? I think right now the important thing to remember is that there's still, I guess, so much of the market that's out there to allow us to grow, like to allow pretty much everyone that's in Australia right now to keep growing organically. Even if we all keep the same market share, we can still triple, quadruple in our individual size over the next few years. So I guess as a guess right now, it may be a 10% market adoption. That means there's 90% of the market left for everyone to share. So I don't think consolidation will happen that quickly in Australia, just because there's so much room left to grow. But we will probably reach a point where it becomes a lot harder to acquire a new customer because every new customer that we want to acquire is already with another exchange, and that's probably the point where it starts to make more sense to consolidate. But we're probably still a while away from that. What do you think?
Yeah, I think that's probably a reasonable comment to make. The amount of growth that's still left out in the market, and likewise, I think that there's probably still an awful lot more growth and maturing amongst all of our respective businesses still to go before we start looking at something like a consolidation amongst this. But equally, who knows where we're going to be in 5 years' time? It's the pace of change that's in this industry at the moment, and here in Australia, more importantly. What do you think?
Yeah, I mean, I would have to agree. I think, there's plenty of room to still grow, and I guess the industry is quite early still. So, there could be different angles and different, business models that some of the players will take. And I think, like it's already been said, consolidation is probably for when, I guess, the market's a little bit more saturated. I guess in this industry, we've all had to adapt and change. And so I'd be surprised if, anyone would be sort of against that. And I think, if we can sort of do something with another company that would then get us there quicker, whether that's raising capital, I think that's what it's all about. I think everyone starts business to sort of everyone wants to 10x or 20x or 30x. So it's just about assessing what opportunity we have at the time, and whether, there's opportunities internally as well. But for now, it's just, trying to get the awareness out there, and just get as many people, using our products and services.
I would shout, but I think the online audience would miss out on my great questions. I noticed that all three of you are involved to some extent in superannuation. There's, you've all got SMSF options. I noticed that no Australian super funds, as of yet, to the best of my knowledge, has sort of a crypto option. As I understand it, I think for probably all three of you, this kind of started as just organic demand from Australians wanting to gain some exposure to cryptocurrency with their retirement savings. Can you talk a little bit about that space, the kind of opportunity you see there? Because as I understand it, the demand for it and the growth of it's been pretty spectacular.
Yes, I'll speak on because I've got the microphone. It would be foolhardy to make the leap that just because they're not public, that the super funds aren't looking. And I think that for them, they're looking for their best on and off ramp, would be my estimation. They probably haven't got the mandate within their investment portfolio to do so yet. But it would be foolish to think that they're not looking, would be my point for that. For us, we saw a fivefold increase in SMSFs onboarding across 2020. We see a continuous ramp up in that sector. We specifically had to hire what we call the non-retail, the non-individual onboarding team. That team is now numbering 3 with the amount of volume that's coming through our exchange. We also saw a change in the investment behavior from SMSFs. We expect to see a portfolio that includes BTC, Ethereum, XRP, and LTC. Those are the 4 biggies. We expect to see that. We've also seen that in numerous months, products like, or assets like BSV be in the top 4, XLM. So there's others, I just kind of, ETC, I think 1 month was in the top 4 investment from SMSF. So what that tells us is that there is an increasing appetite to really go under the hood of what all these different projects are about and really learn and understand what they're investing in. So they're not passive even within the SMSF kind of activity. Because that was our expectation, was they buy, hold, and come back to us in 6 months, dust it down, see if it still works and move on. That's not been the case. There's been regular trading activity. They're not day traders, but there's been regular trading activity. There's been movement in and out of different assets. It's really fascinating, but I think it's probably similar to other platforms in that they're still learning, they're still figuring out how they want it to look and feel, what their portfolio is going to look and feel like. But the sense that they're just kind of putting in 50 quid and walking away, absolutely not the case, not for us, that's not what we've seen.
Just quickly adding as well, I think just back to the asset allocation piece as well. I think people are getting smarter. They want exposure to alternative assets, and I think I guess that's where we come in, and we probably have a bit of a responsibility to ensure that the tokens that we list on our exchange are are relatively I guess they're not I guess too speculative. I guess CoinJar's been a little bit slower to list some of the tokens, and I think it just comes back to that sort of piece around legitimizing the industry. We know the interest is there and it's growing, and it's just about you don't want people to lose money and then they get burned and they never come back. So, but I think around allocating some of your assets to obviously alternate assets in the space is I'm not going to say smart, but there's no financial advice. But I think that's what we're seeing with the SMSF play. And I guess it's an opportunity for them. They've got funds in their super portfolio, and I think they just want something new.
Yeah, well, I think we're basically out of time, and I think the idea is we're now going to seamlessly transition into a Q&A. Steve tells me. So we're going to have some of the panelists from before come and join us. And then we're going to open up to you guys on the floor to ask your burning questions. So if you've got one, seamless. Look at that. This is. Do you have any questions?
In terms of the assets that you filter and decide on, the ones that get listed, do you tend to look at some of the international exchanges and what they've already done in terms of DD, or do you have a pretty thorough process yourself? So I'm just interested in seeing how do you evaluate risk?
So there's, I guess, a checklist that we have. The first point on that is there any demand for that token? Do our customers actually want this token? Do they want to trade it? If they do, then I guess we have to make sure that it's a token that we want to list. So we get a legal opinion on it, make sure it's not a security. We'll also evaluate the community behind the project. We'll make sure, I guess, that it ethically aligns with what we do and how we think. And we've removed coins in the past because that wasn't the case. We also, I guess, ensure that the community behind the token is, large enough to, create a marketing push. It's just kind of all the usual considerations when you're running a business, and you want to make sure that when you put the effort into listings, I guess when we do a listing of a new coin, the effort involved could be from a few days to a few months if it's a more exotic blockchain. So we need to make sure that, if we put in the effort, that's, I guess, we'll get the ROI on that. That's kind of the gist of it, I guess.
Anyone have something to add?
I can just say from BTC Markets' point of view that would be very similar to our own approach. I'm sure it's similar for everybody else. My primary concern is the legal perspective on it. So that's what we go to first. I want to make sure that I am legally allowed to list this. That doesn't fall into the security trap. We also then, similar to yourselves, review what the underlying ethos is behind the project. And is this something that fits in well with the rest of our exchange? For us at the moment, because the delay lies for us in launching new tokens is building the blockchain. Say, for example, with Algorand that we listed towards the end of last year, the amount of work our development team had to put in to build that blockchain from start to finish is quite considerable. And that's where the resource allocation internally goes. Once we've got the legal sign off, is like, okay, do we have dev time to build a new blockchain from start to finish? And so, yeah, that's our main consideration. How about you?
Yeah, much to like what Caroline and Adrian said. I think CoinJar, yeah, we do look internationally as well. So, you know, just back to that global mindset from day one, looking at what the other exchanges are doing and what the liquidity is on their trading pairs. Obviously getting our own legal advice. You know, we have on at least one occasion received advice back that potentially this new coin that we're looking at, you know, may not be the way to go, in that it might be an MIS or a security. So yeah, just I guess you have to adapt, and you can't be too married or tied to the idea that you're going to have, you know, 100 pairs tomorrow. And at the same time, yeah, just having an internal framework where you are running it by your compliance team. But I think just coming from a conservative element, you always want that external advice, just to sort of back you up as well.
Yeah, just to make sure we keep going through questions, we might throw it back.
Hey guys, just curious to hear about your challenges that you've had with banking, what you've done to overcome those challenges, and what needs to happen to create more certainty in the industry around banking.
Yeah, it's a great question and a topic I think, you know, Blockchain Australia's obviously been pioneering. I think early days, there probably wasn't too much we could do aside from, you know, I guess, you know, without being a regulated entity at the time, there's only so much you can do. I think now what we've noticed, and I'm sure everyone else has probably noticed as well, just having a relationship with AUSTRAC and being a regulated DCE, a lot more people are willing to work with you, even just on an international scale, and even just some of the products that we have around our debit card. I think just more opportunities are coming our way now, both in the UK and in Australia, and for that we're sort of, I guess, grateful. And yeah, I guess regulation, my opinion is it's good because it legitimizes the industry, more people want to work with you, and that creates more opportunities.
Not going to give anything away, but we all know that it's quite hard to get a bank account. There isn't really much we can do besides obviously speak to Blockchain Australia and talk with one another and try lobby. But if you go to a club and you've got a tattoo on your face and they don't want to let you in, they don't let you in, and there's nothing you can do about it. And you can shout and cry and do what you want, but that is what we're all facing. We've got this tattoo on our face that just says we're a crypto exchange, and they say cheers. They don't. The truth is, they don't look at your application. They don't look at your policies and your compliance framework, your transaction monitoring, the fact that you're looking on chain. They don't, because they don't know. They don't understand what that is. Some do, some don't. Not all banks are bad, but it is just hard. It's hard to, yeah.
I do realize we have quite a few questions, so I'm going to become a benevolent dictator, and we might just have one panel member answer each question. If there's a panel member you think might be better suited, feel free to specify them. Otherwise, whoever wants to jump in is probably the best way to do it. Question at the back.
I'm going to be naughty and ask two questions really quickly, unrelated. First one is, what sort of upward pressure are you feeling around tax uncertainty from your users? Because nobody in the world seems to understand it. And second one, how are you finding talent that actually understands the blockchain space? First question I'd love Adrian to answer. Second one I'd love Caroline to answer if possible.
So I actually think in Australia, the tax situation isn't that complex. This is not tax advice. I'm not an accountant or a tax advisor, but I believe you just pay capital gains tax every time you transact. We partnered up with KPMG a few years ago to provide our customers with a KPMG tax summary report. So this basically provides them with a button that they click on. We send their anonymized data to KPMG. KPMG figure out their tax, and then we give them a report with our letterhead on it and the KPMG logo on it as well, which they can bring to their accountant, their auditor. And, we kind of found that our customers really like that because I guess seeing a KPMG logo on a report really makes accountants feel more comfortable. So that's how we addressed it. I know the ATO is looking at the space really closely, but I feel like it's not that uncertain. I think it was a lot more uncertain a few years ago, but now it's becoming kind of okay.
So the question was about finding tech talent that understand blockchain technology. What we've found is we're still recruiting, so anyone knows any devs looking for a job in Melbourne, send them our way. What we found is that there's an awful lot of enthusiasm to learn about blockchain, but not a lot of people have had that kind of exposure. It's a limited pool. And even internally for us, one of the aspects of our recruitment, why people want to work with us, or devs in particular want to work with us, is because they know they're going to get rotated through our blockchain team. They know that they're going to get that exposure. And for us, we're very keen to do that as well, specifically because we know that we need to grow that pipeline badly for all of our sakes, for the whole economy's sake. So we're very happy to do our little part and get that talent and get it exposed to the tech. Likewise, we're working with RMIT to build out in partnership an education piece where we engage directly with students who are trying to get involved in blockchain, get them on the tools, get their hands dirty with the tech, with hopefully the promise that they will then come and work for us upon graduation. But it is a real challenge. And I think once the regulation has gone in, that'll be the next issue that we'll be looking to address for the economy as a whole. Because, yes, we're a crypto exchange, but blockchain applicability is across all sectors. So there's an awful lot more. Are you looking for a job? Fair enough.
Do you have another question?
Yep, just over here. Thanks so much, guys, for the panel so far. It's been great. I just had a question with respect to how you're thinking about DeFi currently. All of you sort of touched on the idea that you're looking to maybe integrate a few products around lending, potentially, or deposits, or potentially derivatives. I just had a question around how you're currently looking at that with respect to things like regulation and compliance, but also in terms of offering users access to sort of these global markets that are expanding on DeFi currently.
Who wants to take that one?
Yeah, it's a great question. I think the way I tend to think about DeFi is, I wouldn't call it risk-free return, but just thinking about other ways to, I guess, earn a yield in the digital currency market. And I think there's other ways where the regulated market can intersect with, cryptocurrency. Some of the players out there have, futures. And I think, just marrying up some of these instruments with other, our spot markets as well is one way that I guess potentially you could get exposure. And I think DeFi as well, I think it's just another learning curve, I think. And I think once you're in the industry, once you have assets in your wallet, I guess it's something that, you can look to add on as well. And I think, I guess crypto is quite risky. And so coming from an asset allocation perspective, how can you generate a return on some of these assets that you hold during even volatile periods is it's definitely interesting. Obviously just need to work through a lot of the regulatory landscape there.
Well said. Do we have another question? Pat?
Hello guys, thank you for the panel so far. So this is a bit of a regulatory question. So in recent years, we've seen the decline of Bitcoin dominance and the rise in other currencies such as Neo, Cardino. How do you think the government's going to look at this? Do you think they're going to prioritize working with these sort of cryptocurrencies over things such as Bitcoin, as they seem more regulatory friendly, for example?
When you say work, the government work with the blockchain,
Well, as in regulate and adopt these sort of currencies over Bitcoin.
So, look, I think if we look at other markets, so I know, for example, in Malaysia, they look at each coin on its own, and they either say yay or nay to each coin. I think we're at 4 coins in Malaysia at the moment. Will always be what the people want as priority, Australia may regulate it in a totally different way. They might try to define the types of asset classes within crypto assets. So utility tokens, commodity tokens, governance tokens, based on that sets their legislation. In terms of what will be given preference, unfortunately, it will be the coins that are in the wallets of most people. So the highest risk to the population, in a sense, that's what they'll try to regulate first and foremost.
Any other questions in the room? No. You already had a turn. Steve says yes. Go on to back.
Price target for Doge by the end of the year?
Excellent question. Anyone want to have a go?
Just a quick one for Adrian. Is Independent Reserve potentially going to be building its own exchange coin? And if so, when?
That's probably more of a question for our lawyers.
When's the upcoming?
It's not, I guess, one of the things we really considered very deeply, and it's not on our immediate roadmap right now.
Thank you.
Hi, everyone. We all know that the recent bull market was generated with the institutional investors and corporate. I was curious to know what is the share of your customer that you would consider institutional, and how dynamic do you see the institutional market in Australia?
The Australian institutional investment. I can tell you that on our exchange, without going into the specifics, we've got more corporate Australia than institutional Australia, and there are refer to financial institutions. So corporate Australia's come to the party quicker than institutional, but I think that probably goes back to the earlier point about the need for infrastructure, that on and off ramp for institutional money to come in. And the institutional money that we have seen would be from much smaller entities, smaller funds that are getting involved, or they're getting interested in this space, because it's easier for them due to their size. To come in, but we have seen probably more involvement from corporate Australia than we've seen from institutional. Does that answer it? Thank you.
Question from the internet. It says, do any exchanges, and this is a general question related to, I guess, the sophistication and the maturing of the ecosystem, do any exchanges go through independent audits of their financial statements, voluntarily or otherwise, for SMSF purposes, just to try to entice in that segment of the market?
So can you just rephrase that question again? Do we ourselves get, well, I know I can't speak for the rest of the panel, but I know that we had a independent financial audit done on our books last year, which we passed with flying colours, pleased to confirm. And we also obviously have AML KYC audits, as I'm sure everybody else does. We've done ISO, we've got ISO certifications for ISO audits, we're going for SOC, so we're going to have all those audits to come through. So not just about SMSF, but it's also more broadly about how we operate as an exchange is constantly under external scrutiny.
Yeah, we're all about audits as well. So we'll be doing audits very, very shortly. We've also had AML audits. I think it's really important to get external assurance to, give everyone the assurance that you're doing the right thing, because ultimately we are still, not that regulated. So there's no regulator making sure that, we don't run away with people's money. And we are holding a lot of people's money. So it's really important to assure everybody that we are doing the right thing with it.
Thanks for a great discussion. And just on that note, some latest research I'm seeing is that only 1 in 5 Aussies are taking their crypto off exchange into a hardware wallet. So 4 out of 5 are using our exchanges as crypto banks. And yet we're not seeing anything from APRA around, what kind of regime would be appropriate, if any, to have DCEs comply with. So just be interested in some comments from the panel.
Yeah, I mean, I guess initial idea of crypto was it can be your own bank, but it's actually pretty hard to be your own bank. It turns out you got to figure out how to manage your private keys, how to back them up, how to not lose them, how to encrypt them. So most people probably aren't equipped to be their own bank. So then they rely on exchanges because that's kind of the next best thing. Exchanges kind of become the custodian of other people's crypto. Not all exchanges are perhaps equipped to do that, hence the need for regulation, hence the need for auditors. I'm not sure if APRA is the correct regulator to be regulating crypto custody, but I'm not a lawyer, not like yourself. ASIC is probably the one to regulate the custodians, but I do believe there is a need for regulation around how crypto is held at exchanges, how cold storage works, how a hot wallet works, who can access these things. I do think there's a need for these rules to be made, I guess more enshrined in law. So I guess right now, Independent Reserve and a few other exchanges, we're under the Blockchain Australia Code of Conduct, and this requires us to do certain things, but this is a voluntary thing. There's no regulator enforcing it. And I guess it'd be great if parts of the code, a good place for an AFSL for crypto exchanges to start would be to look at the code of conduct that we have at the moment. It's probably about 90% of the way there.
So also, I'm not a lawyer, but in terms, my understanding is that APRA is about being prudent. It's a prudential authority. So a bank, for example, takes your deposit. You think it's sitting in ING, you're earning a bit of interest. The money is sitting in Caroline's account, right? They're loaning it out for houses, and they've got more money loaned out than they actually have, right? Crypto exchanges don't do that yet, but when they do it, it will only be once there's regulation. So at the moment, and this is what I've been saying, we shouldn't say you are under APRA or you are under ASIC. It's a totally different asset class that was created 12 years ago. Regulation needs to be created around this asset class and around what the exchanges do and how we work and what our business models are. Yeah.
I think we're going to wrap that up there, but clearly, I mean, we could speak for hours on this. There's clearly a lot of interest, and it's been so exciting to see, as Caroline mentioned, blockchain week happening, and there's been so much excitement, so much enthusiasm. To have senators come and speak, I think is sort of a landmark in and of itself, but we'll have to wrap it up there. Thanks so much to the panelists. Thanks so much to the audience for coming along and asking questions, and hopefully we all see you back in 12 months and we've all gone on to bigger and brighter things. Thanks so much. Thanks so much. It was great. Yeah. Thanks. I said, bigger.